How's everyone doing? How you all doing? Hi guys. Hi Boone. How you doing? Hi Paul. Good to see you again. Good. Yeah, good. I am. Thank you very much. Yeah, I slept. It was a long day for me yesterday. I slept really well actually in the end. Thank you. Hope you did too. I'm enjoying my weekend. It's nice and sunny here in the UK, which we haven't had for a few weeks. So it's cold but sunny, which is still it's worth it. Hi everyone. Hello everyone. Hello, hello, hello. Okay. So this is the process. All right, guys. So this is the process. You start by you start by looking at the news. You want to get a sense of this is you. I'm taking you through the routine, right? So the first thing you want to know is make sure it's the correct one, and we'll do it on Singapore time. So the first thing you want to know is any major stuff that I have to pay attention to. Now, over time, some things are more important than others. So if we were in 2008, 2009, 2010 global financial crisis, then everyone's looking at interest rates and jobs numbers because that's what gives them security or comfort. So right now, the markets are a little bit concerned with inflation and jobs for different reasons. They're worried we're at the beginning of the market as a unit is concerned about being at the beginning of another global financial crisis. Um, so the big stuff this week is sure, there's high impact CAD news, GDP, which could create a bit of a stir there, sure. There's jobs numbers here. So for the most part, people are pessimistic about the US economy, Americans as well. And so they're anticipating, they don't trust the data that's coming out now because in the last year, the current administration has flat out made numbers up. So they don't quite trust the numbers and they're pessimistic. So I think in a way, even if the numbers are slightly bad, it's not great, but it also doesn't surprise the market. And this is what happens, right? The market doesn't like surprises. So ordinarily, I would say to you that it actually matters what kind of news it is, but we're in a really weird place at the moment where you want to know when the news is, but I'm not necessarily sure the kind of news that it is makes a difference because unless the data is reliable, the markets can't do anything with the data. They don't know if it's real or not, and they're pessimistic anyway. So even if the number is a bit bad, there might not be the big response that you think. Okay, but I'm going somewhere with this. So these are really the big ones now because the expectation is that unemployment is going to grow. ADP non-farm is also expected to be negative, like job losses increasing. And it's not all tied to AI. It's just a general sense of that. And so unemployment, and of course Friday, normally the first Friday of each month is normally non-farm. So historically, this was um, the big kahuna, the big number. But the problem has been, if we just go down and we have a look at this, is that if you take not the forecast, but the actual and the revised, a lot of the times the numbers have either been really bad or revised down. So like this one here, where they literally said, "Oh no, that we created this many jobs," and then actually said, "No, actually we did this." And so it's not a margin of error. They just flat out just made up a number, and then when the real numbers came out, got revised backwards. So over the whole year, it's performed. The jobs have been like the worst. Maybe I don't want to say the worst in history, but bad. Anyway, so just to bring you to this now, the other thing you need to be aware of is that the petrodollar. So the this is how it works, right? So if I haven't told you guys this, it's good to know. So basically, because the US dollar is the world's global reserve currency, one of the things that happens when that happens, whoever is the global reserve currency, is generally all commodities tend to get priced in that. So gold, crude oil, pork bellies, orange juice, all cocoa, coffee, all priced in US dollars. So what happens is, if you're panicking about petrol and fuel now, and you're buying it as you're a country, you've got to buy it. You end up paying. You have to pay for it in US dollars. So because you're paying for it, you're buying it in US dollars. The US dollar is strengthening. So everybody's expecting the US dollar to weaken, but right now there's a bit of a crisis, a global energy crisis, which is causing countries to buy oil as much as it can. It's causing the cost of oil to go up, and so US dollar is strengthening on the back of that. Okay, so despite what you might think about why all these other reasons are that the US dollar should weaken, I'm giving a reason why the US dollar should strengthen, and it's predominantly because of this current war, which is unlikely to go away anytime soon. So the first thing we'll do here, let's go to our weekly. We'll just do it here. We'll do it as a group. We will let me just find the right template here. I've got too many templates. Is it this one? No. Uh, price action? No. This one? No. This one? Yeah, that'll do. That'll do. Okay, so the RSI and the MACD are just there for double confirmation for now. And we'll just run through everything. So the first thing we want to do, guys, is get a sense of what's going on with the US dollar, right? It's still the biggest cog in the system. It could still be that way for the next 20, 30 years. Could take a while to, like, it doesn't just change in 3 or 4 years. It could take 10 or 20 years because it's a huge amount of effort. It's like Brexit. It's so many people and businesses and economies have built themselves on top of all of this stuff. And to change over, it's like changing operating systems, if that makes sense. No slides visible. Hold on. When you say no slides are visible, you can see my chart, right? Just double checking, Roberto. Okay. Excuse me. Okay, cool. No charts. Okay, Roberto, I'll stop sharing and share again, but I'm getting confirmation from people that they can see it. Let's just go have a look. So I'm now sharing my charts again. If you can't see them now, it might be something on your side, possibly. Okay, so the first thing we want to do is get a handle on the US dollar. Okay, good, good, good. So a quick tip, cool, thanks, Sam. A quick tip is to look at the weekly. Why do we do this? Well, let's just see what last week's candle did. This was the entirety of last week's activity on euro dollar. That's it. The entire move was a little bit of a, what was that distance? High to low? 150 pips. That's a bit of a joke. 150 pips, tiny. So really not a lot happening. And when you go to the monthly, the relationship, the correlation between time from the 15-minute to the 1 hour to the daily to the weekly and price is not linear, guys. So if you are on the 1 hour and you're looking at a 30 pip move, if you go to the daily, that is not 24 times the distance. It doesn't work that way. So just remember that what we look at on the monthly, that the price stuff doesn't multiply as much. So the price stuff is separate from really what you're able to see on the monthly is more like important price levels. So if you look at predominantly, you can see that starting in around April, May last year, and basically we're in April, so a year, we've been range bound. All right. And this is largely tied to tariffs. But it's largely tied to tariffs, but also like it's spreading, contagion. It's spreading into other stuff now. The war has now impacted energy. And in between the two, all of the trade deals and all the tariffs have also started to impact the stock market. So it's like this contagion that's impacting a lot of different things. And all it's really kind of doing is strangling it. It's like it's taking all the nutrients away, all the current agreements and stuff. It's not necessarily a bad thing. In a way, the deck is reshuffling. So it's time to maybe mix things up a bit. Not necessarily a bad thing, but how long it takes to get to the better place, I can't tell you. It could be quick. If 5 years would be quick, 5 years will just be like that. But Anyway, so the reason I'm telling you this is because we are in this range. And I think breaking out the range, there's been a couple of attempts, tried there, tried there. Breaking out of the range is essentially from 1.14 to 1.18. And because the euro is the second biggest against that, you might as well spend a lot of your energy focusing on this. It's significant because the day when it comes that the dollar breaks out either side, um, should see, we hope, a couple of months worth of really good moves. And we would see it across all the majors. In the meantime, if you think about it, if the two biggest currency pairs are not doing a lot, they're stuck in a 400 pip range over a year, excuse me, if there is anything else, if there are any other majors that are moving, that's the one you should be focusing on. So let's just say you go across to um, dollar CAD, and dollar CAD is actually moving. Then possibly we should be looking at dollar CAD this coming week. This coming week. So we've got a level. Let me also show you a couple more things. I'm going to need to speed this up, but there's quite a few big levels here I want to be paying attention to. So let's put a level in there. And let's just mark this level over here. And if we do break through it, there's probably a little bit of a level there. Like I'm just kind of just broadly doing this. If we go back down to the daily, you could kind of see where this could potentially go. Okay, broadly speaking, we've got some room up to there. And this is a daily chart. So for now, any kind of a pullback here could represent a nice buying opportunity. But it is interesting to me that dollar CAD is actually straying quite a bit from the whole process. And let's run through this. What is GBP doing? GBP is a mess. So when you see a chart that shows you this, that means that going back all the way here to the 27th of February, it hasn't done anything. And so again, it's going to take, this week is going to be gone by in the next 5 candles. So I'm not saying to you, you shouldn't check it again on, say, Wednesday. But the very fact that this isn't going anywhere, you could either put alerts in place, like just what you're trying to do here, guys, is you want to eliminate the charts that have nothing to offer, that will probably have nothing to offer in the coming weeks. So if we get onto the 4 hour, this is just insane. There's no trends here. It's just too choppy. And combined with that, every time the news is going to come out in the coming week, the markets are just going to swish around. So you need wider stop losses and you need to take profit sooner. Historically, you would target 1-to-1 minimum. Um, Ideally 2-to-1 or 3-to-1. That would be normal. Now it's stupid. It's like half to one. So in other words, you will risk 1% to make 0.5%. But your odds actually go up. Your win rate is actually much higher. So the markets are very low to do much of a change. They're not doing a lot of that, just to be aware. Okay, so euro dollars not really expected to do too much. Cable, GBP not really doing very much. We go to Aussie. Aussie's breaking down quite a bit. And when you look at it, if you get that perspective, it kind of makes sense. When you look at it from a monthly perspective, it's actually, I like this. I still think we should be keeping an eye on it. I'm not saying it's fantastic. I'm just saying that you can see it broke through a resistance level, came up to the next level, and it's coming back down. So this week, what would I be doing? I would be monitoring. I'd be monitoring this area for potential buy opportunities. So what would that look like? It would be a nice bullish candle like that would form here, and then it would continue up to there. So Aussie dollar, US dollar would be the first one on my watch list. And again, guys, the probabilities of stuff now, because the potential for every other day to have some kind of a tweet that comes out that disrupts the market, which is not normal, by the way. You have to prepare for that. So just for the time being, consider this kind of like combat trading. You have to take profits sooner. You should be risking less per trade. I think if you're not risking 0.5%, if you're risking 1%, I think you should drop it down to 0.5%, unless you have a very good reason to keep it above that. And then I think you should aggressively be taking money off the table. It's not forever, but it is until some of the trends start to return. So Aussie dollar sits on my list as a potential buy opportunity here, which would be Monday or Tuesday. And as soon as it starts going my favor and I'm 0.5% up, I'm going to take a bit of money off the table. So what you're really, guys, what you're always trying to do, remember, is it's not just about making money, it's about not losing money. Having a whole lot of really good trades is meaningless if you've also taken a lot of really bad trades because you just keep giving stuff back. And the problem with bad trades is that's like poison. Enough bad trades and you start to lose your love for trading and you don't understand why you're doing it and it starts to mess with your head. So actually, in a way, even if you're making very, very small profits, but you're not having losses, you are still in an emotionally better place. Does that make sense? So in many ways, now during combat trading season or whatever the hell is going on, you really have to protect your mindset more than normal. And if you do all those things, if you do all of those things, if you prepare for war and plan for peace, it's not actually ridiculous to use that terminology because it helps everyone understand what we're going through at the moment. I'm not really a fan of Kiwi dollar so much, a little bit too choppy. Dollar yen is very interesting. Now, on the off chance that some of you don't know this, okay, there's some very key levels here. So there's 160 where it is. And there's 158. Now, that's not really the thing, but how much history do we have here? We don't have enough history. Okay, give me a second. I just want you to see this. So if I go through to here, and you look back, this is 1970. Okay, so this is, a good 56 years of history. Dollar yen is sitting at this level, which is the last time we were at that high was in 1990, January 1990. And if we break through this, the next level sits at 177. What's the low of that? 177. So I want you to understand the historical significance of where we are. Okay. The historical significance of where we are here. This 160 level, this level here is a very, very big level. And the pressure is on. Does it mean that we're definitely going to go to it or definitely going to be rejected? We just have to see. It is one of those ones where you need to understand the 160 level is quite significant. And you need to understand that Bank of Japan is watching this heavily because that's massively significant. That's not really where they wanted to go, but it might end up going that way. And the problem when something like that happens, when the market pushes it that way, because the market can always go higher or lower than you think it can, is the Bank of Japan might then have to start taking action. So why am I telling this? Well, because if this wasn't the case, this would absolutely be on my watch list. This is a great, great, great chart to trade. It's got a nice uptrend. It's got a definite direction, and it's backed by fundamentals. We know that the low interest rates on the Bank of... Do you find this interesting? Do you want me to tell you this stuff, or is this not, you need to let me know it's not relevant to you. Okay. Hi, Patricia. Okay. So, guys, central banks around the world have different interest rates. Now, Japan famously has incredibly low interest rates. So what happened was, if you are a wealthy person, you're a wealthy American, just bear with me. So you're a wealthy American. So what you normally would do is you have your dollars that you make from your money, from your wealth, and so you buy stocks, you invest your money. However, I don't know why I did that. However, there is a bonus opportunity for you here. You can, your interest rate in the US is 3.75. Let's say 4%. So the problem is that when you borrow US dollars, you're paying 4% interest rate. But hold up, hold up, hold up. You could borrow yen. You could borrow yen where the interest rate's much lower, convert it to US dollars, all right, and then put it in the stock market. So there's another layer of something you could do before you put your money in the stock market. And so what's the difference? Well, the difference is you actually make money on the interest between the two. Because you're borrowing and then converting it to dollars, you actually do make money on the difference in that interest rate. You make the difference. Because effectively what you're doing is you're borrowing 0%, converting it to US dollars, and that you benefit from the gap between the two. So that is what happened is very wealthy people, institutions, banks, central banks have all started doing that. The strongest economy in the world prior to 2025 was the US economy. So there's free money effectively because you could borrow the yen at very low interest rates, and it was actually at zero for a while. It was like very low, 0.25 for like 30 years. And so this actually created a flow of money into the US stock market. Into the US stock market, there's a foundation of yen that if the interest rate, now Japan has a problem, the yen keeps weakening. So the yen keeps weakening. And so one of the number one go-to trick to strengthen your currency is to increase the interest rates. I'm saying this slowly so that it gives you time to process this. So Japan, Bank of Japan wants to increase the interest rate. But if you've got very low interest rates, people borrow quite a bit of money. So like credit cards and banks and stuff like that. So the problem is that Japan, which is normally a savings culture, has also at the same time got comfortable living off loans that have very low interest rates. And so we tend to live to the edges of that. And so if those interest rates go up, it's going to put strain on people's lives in Japan, on their economy internally. But they have to because the yen is weakening and they're an export economy. So they're stuck between a rock and a hard place. They're like, we need our currency to strengthen. And the problem is that if we do strengthen it, it's going to impact our people at home and it's going to cause people in the US, at some point in the US, they want to lower interest rates to keep the stock market going. So to cut the rate, they want to do that. If you cut rates, people borrow and invest, and it's just historically low interest rates push stronger stock markets. So Japan is screwed now. Excuse my language. The US wants to drop its rates. Their currency is weakening. They need to strengthen their currency. They need to raise rates. And what that's going to do is now what happens is the profit. If you're one of those people that had yen that converted it to dollars, that gap, that profit's not really worth your while anymore. So what's going to happen is if Japan raises interest rates and the US drops it, people are now going to sell their stock positions so that they can pay back the yen. They're going to exit those positions. So just by Japan raising interest rates, it will cause a lot of stock positions in the US economy to unwind, which will then impact the global economy. So there we go. There we go. And this is just one of those things that most people are not really aware of. Because like, why would we be aware of that? Because we don't borrow yen. We're not doing any of those clever layers and stuff, but that is it. So the reason I'm telling you is I'm trying to explain to you everything, why it's so significant, what's happening with this level, what the next level means, why the Bank of Japan is freaking out, what their options are, why they're stressing, and how this is tied to the global stock markets, which is just mind-blowing. Okay. You can look this up, by the way. You can look it up. So it's called the Great Yen Carry Trade or the yen unwinding. So it's a big thing. Okay. So let's have a look at the Swissy. So I want to go back because the reason I wanted to have a look at the yen pairs was because they're actually sitting on my watch list. So we'll go through all of them. Let's have a look. Euro yen is trending up. It's going a little bit sideways on the monthly. It's got to the weekly. It's consolidating here. This is what's known as like a bit of a diamond pattern. It doesn't really matter what it's called, guys. It doesn't matter. It's a consolidation. It's very likely to carry on up from there. Then we've got pound yen, which is also pulling back and wanting to head up. Excuse me, you've got Aussie yen, which is pulling back, which has got a good trend, which is pulling back into the highs here as well. So you can imagine that this is a really good place this week for the yen pairs to start going up. So this is why they should be on your watch list. Kiwi yen is not looking the same. Kiwi yen is not really looking the same. CAD yen pulling back. It's a really good area for it to produce. So this week, what I would look for, and I'm not saying I would necessarily trade it, but what I would look for is to see the 4-hour trends turn around this week, like turn around and go around. So I'd be looking for trend reversal patterns like upside down head and shoulders, double bottoms across a lot of these pairs. Does that make sense? Because, well, I'm not saying they're definitely going to do that, but I'm saying that's like if they are going to, if all the yen pairs are going to set up, this is when they're going to do it. Swiss yen as well, not really looking, it looks a bit more range bound. But that's it. So we've got those pairs. Sing yen, I don't know why it doesn't look quite right here. But anyway, so Sing yen as well also looking at. So that's something that could be of interest. Those are the yen crosses. Right, let's carry on. Dollar CAD, I was saying, is got a bit of a level, but this could be something that could be looking good. Any kind of a pullback and carrying on. Yesterday, I spoke to guys about how do you determine if something is overextended. Okay, and this is, by the way, is a curse that we all have to live with. So if the market is trending up like this, those are your cycles. At some point, you know, it becomes relatively overextended. So this is obviously overextended because if you look at the previous cycles, that's a much bigger move. But the truth is that most traders would still have thought about there was as far as it was going to go. And this is true. Around the world, you can never really tell when that really big move is going to happen. You can't always tell. It's quite interesting because Elliott wave theory talks a little bit about, and I'm not trying to get you guys on that. I'm just saying that normally that becomes our point. If we use that move, if we use the previous ones as things, that's the point at which many traders would already start taking profit. But the move becomes more and more overextended, right? That's what happened a lot with gold and silver. And if you look here, that's kind of the case here as well. So if we go to the daily or the 4 hourly even, you can kind of just here, you can just sort of get a sense of the kind of moves you have. This is not that overextended because why? Because it's been staying close to the moving averages. So the moving averages here is kind of the average of price. So the overextension is when you're far away from the average of price. That's overextension. We're not. We're very close to the average of prices. So actually, I take it back. This is not overextended, which means I'm not really worried about this coming back anytime soon. So actually, I think we could still see this continue to push up. So if you're day trading, I don't know how many of you, I'd love to know the stats. If you are only trading on the daily and above, if you're only on the daily and above, let me know. So not for those of you doing both. If you are strictly only trading the daily chart and above, let me know. Or just the daily chart. So if you're not trading during the day or lower time frames, let me know here. I want to get a sense of that. How many of you there are, so I can weigh it up. If you're doing both, stay quiet. But if you're doing just daily, let me know. Okay, dollar Sing is climbing up at the moment. So just to quickly have a look. Okay. All right, cool. Now, let's have a quick look at the dollar pairs. Look at dollar yen. Dollar yen is by and large going up. Dollar Swissy is going up. Dollar CAD is going up. Dollar Sing is going up. It's also in an uptrend. So all those dollar pairs are looking bullish. That basically implies that the dollar right now is looking quite strong. It's looking quite strong. Look at Aussie dollar, it's going down a bit at the moment. Kiwi dollar potentially going down. So guys, I think that it's realistic. I think it's realistic to potentially this week in the coming 4 or 5 candles to expect a stronger dollar. To expect a stronger dollar. Don't worry about the jobs news. I've seen good jobs reports and bad jobs reports and a stronger dollar and a weaker dollar. So it's not correlated, not the way you would think. You could get a fantastic jobs report and see the dollar tank. You could get a terrible jobs report and see the dollar go up. Like it's just, it isn't tied to that. You would think it is, but right now there's other stuff driving the dollar, all right? So it won't necessarily change it. Okay, so long story short, we're expecting a stronger dollar this week. Like that's our plan A. That's our plan A. All right, let's have a look at gold and silver quickly. So the problem here is it is overextended to the downside on the daily. That's a big drop, and it's kind of consolidating close to the moving averages. When we go to the weekly, we are still forming potentially a bit of a bullish candle. We haven't really broken the low here. We have kind of broken this low here, and we do effectively have a level of support and resistance. So this is a bit of a tricky one because it implies that actually, if you look at it here, gold is actually still quite bullish. But, and it's pulled back here on the monthly. So it's kind of as though it's selling off. And from a Fibonacci, let's have a look and see what that says from a Fibonacci perspective. So if you do it from here to here, we've kind of pulled back almost to a 382. There we go. So I did it from the biggest low there. So that's interesting to me. I don't think gold is a really great thing to trade right now. What I would do, I did say to my guys yesterday, I would keep an eye on the general kind of look here and see if we end up breaking above this. And also, most importantly, this could be forming, excuse me, this could be forming a bullish ascending triangle. Keep an eye out on that. Series of higher lows. This could end up leading to a expansive move to the upside. Could happen this week. Silver, also not giving a lot of clarity. It's currently in a daily downtrend, but there is definitely a level. There is definitely a level of support here, but there's also something going on over here. So somewhere around $66, something going on over here. So just be aware of that because it should be following through, but it isn't. So just be careful with silver and gold this week. This I think is going to break higher. Okay. Um, Iran is holding everybody's testicles in their hand, without a doubt, and they've made it very clear that they didn't ask for this war and that the US is, and I honestly, I can't tell you that I expect the US to do the smart thing. I don't think they'll do the right thing. I don't think they'll do the smart thing because they haven't done it in a long time. So I think that the situation has the potential to get worse. If I was a trader and I'm putting probabilities on, I'd be amazed. The current administration has no idea what they're doing. They're like vibe presidenting, like it's all done on social media. They don't really have any real negotiating skills. They don't have a plan. So why I'm saying that is because I think that the pressure is building up, and I think the situation would they de-escalate the situation? No, because I think it's all like threats and tweeting and all kinds of stuff. So I think there's a fair amount of pressure building up that could break to the upside. So this could end up being an amazing trade because it kind of has already gone up to $120. So if it's building up here, the pressure would build up, and when it does break, it would just go straight there. So that's something that's interesting. Yes, I still think stagflation is a valid concern. Okay, guys, so what is stagflation? Stagflation is when your economy isn't really growing in terms of jobs, but the cost of goods is still going up. It's horrible. It's not supposed to happen. That I'm oversimplifying, but that's essentially it. So yeah, inflation. Look, inflation can come about as a result of a couple of different things. This is for everyone. Normally, inflation would only occur because there's a shortage of things. So the prices are normal, but because we're struggling to get milk or toilet paper or various things, the cost goes up because there's a demand. There's a shortage of supply and demand takes over. So they pay more to get it. But during COVID, I know this sounds ridiculous, but during COVID, people didn't travel, they weren't putting fuel in their cars, they weren't going on holiday, they weren't going to the shops, and actually spending shrunk. Like, not on purpose, but just people weren't doing anything and everything was uncertain, so they just didn't spend as much. So what happened was there were supply chain issues, legitimate supply chain issues, sure. And so corporations, you must understand that corporations go through phases of being extra greedy. Like if they're making a ton of money, it's hard for them not to do it. And so during COVID, they did quite well because they got government bailouts for the most part. Plus, they still managed to up their prices because they could argue that there was a supply chain demand. Then what happened when COVID started to come undone, or in other words, when the kind of flow of things started to go back to normal, they worked out that people had all these savings. And so what they decided to do was not drop their prices. There wasn't anyone who brought their prices back down after COVID, really. And so their plan was to effectively still get access to your savings. They know people had money. And so where we've got to now is that corporations are announcing record profits, but the quality of food, I don't know if you guys have noticed this. I'd love to know if this is happening on your side of the world as well. The quality of food is really not great anymore. The quantity. So you get what's called shrinkflation, where your crisps are just a bit smaller. Like everything is like packaging is shifted and the weighting is shifted, but the pricing is still going up and the companies are still announcing record profits. So that's kind of where we're sitting at the moment. And so it's not sustainable. It's not sustainable. Eventually, things are going to be too expensive. But now the inflation is coming from corporate greed. They refuse to they're doing very well. They're announcing record profits. Everything's about stock markets and kind of like with we've lost not us per se, not the person on the street, but kind of like as a society on the whole, everyone has kind of lost sight of how expensive things should be and how much things should cost. The average cost of things has gone up about 40% since 2020, which is madness. Okay. Like in the UK, everybody's switching to solar power and wind. Everybody's switching to it. But our energy bills are going up. Our energy bills keep going up. So, like, what's giving? What's going on? Okay. So there's a lot, but I have good news for you. Like when all of this stuff is resolved, we should actually, historically, we have a very good period of time after that. And you'd much rather cut your teeth or develop your skills during a period like this so that like it just, you need to go through all those patches to mature as a trader and as an investor. Okay. Anyway, sorry guys, I digress. So this is on my watch list. I think there's a very high probability there's a good breakout there. It looks good. And the more it builds up, the bigger the break will likely be. But, if we break this low, so if the market comes down this week and it breaks that low, then this pattern is null and void, goes away. Okay, goes away. Let's have a quick look at the indices. So they're looking quite bearish. You've got to get some perspective here. So you've got to come in. This particular level here, support resistance, is quite important. We're going to see if it holds. But if it doesn't, we could see a correction down towards the 50, like we do here, like we do here, like we do. This was when tariffs first came out. This was the last bear market we had. And this was COVID. So you can get a sense of how I say how serious just how big it would be, for the markets to break through this level. So that is definitely something we want to watch this week. It's coming down here. We got to see how it walks. So this week will be, I don't want to say historic, but it will be significant. If, on the other hand, we break upward through here, we break this high, then the market is likely slowing down. So you really want to, I don't think you want to participate in the market. Or if you do, you really want to make sure you've got stop losses and taking profit. Like guys, as a mentor, now is not the time to trade without a stop loss. You can widen it if you want, but don't trade without it. Because now is the time when the most black swan type of stuff will happen. And if you've been like, oh, I have a mental stop loss and I have that, now's the time you really don't kind of want to do that. Okay, let me explain why. Let me give you an example, real world example. Um, I'm going to show you something. So in 2015, here, okay, so long story short, Switzerland has its own problems. Switzerland has its own problems where its currency keeps getting stronger. They're generally politically stable. They are a safe haven for wealth. And so their currency, next to the US dollar back then, the yen and the currency were the next safe haven currencies. Excuse me. And so the current somebody inside the Swiss National Bank, the SNB, was actually buying that. There's some story behind it. I need to find it. Um, I need to find it. Give me a second here. Um, I'm just going to ask Perplexity. Back in 2007 up until 2015, there was somebody in the Swiss National Bank in the SMB or a group of people that were actively trading against the Swiss franc. There was some story behind that. Can you find out what that is and tell me? Let's see what it comes up with. Point is, the currency kept strengthening, and it turned out that somebody inside the Swiss National Bank was accidentally on the wrong side of that trade. There was some. Okay, so after 2008, the Swiss national franc became a safe haven currency. Anyway, there was just something happening. There was some story behind it. Okay, anyhow, the point is, the Swiss National Bank didn't want it to strengthen too much. So they started pushing back. They started intervening. They kept pushing back. And they said to people, look, 1.2 is our floor. 1.2 is our floor. Don't test us. Do not test us. And every time the market would come down, they push it back. So traders left the markets. You can see the difference here between a layer of speculation and then all the speculators go away, which means that all you're seeing here is just transactions that have to happen. Tourists exchanging money, businesses doing stuff, but there's no additional investing or trading activity on the currency. Anyway, but it turned out they had to keep propping it up and the pressure kept coming down and they were spending like billions propping it up. So one day they decided to just depeg it. They literally just said, we're not, they didn't tell anyone. They just disconnected it. And I was sitting at my desk and I had a pound QB position open. And the pound QE, suddenly all the charts just went nuts. We were like, everyone was like, what the hell is going on? And what happened was the spreads widened. So like your spreads went from like 3 pips to 300 pips. So my pound QB position price wise was massively in profit, like ridiculously, like 10% in profit. But the spreads had widened so much, I was a negative drawdown. It didn't make sense. I was like 3% drawdown. That's how wide the spreads got. So they broke the currency market. So the reason I'm telling you this is imagine you are like, well, I don't have a stop loss. I'll be at my desk, and if anything happens, I'll just close out my position. I want you to understand a situation where something happens so quickly that the spreads widen and you can't close your position because liquidity has evaporated from all of the banks and all of them in a situation like this. Um, and you can't even close your position, and the spreads are widened, and your account is maybe 150% in drawdown. So all I'm saying there is that your stop loss becomes that extra layer of insurance. It's not guaranteed, but it is the best, closest thing. And actually, during that period, Oanda, there were some brokers that actually honored all their stop losses. They honored all of them. So there were some people that didn't even feel a thing when it happened, but there were other entire brokerage firms that closed their doors. Like the next week, they were done. So I just want to kind of explain a scenario to you that you have to imagine, because otherwise, if you can't imagine it, you won't do anything about it. So just imagine a scenario without a stop loss. You don't want to do that. So this is what we're going to be watching for this week. Does it manage to find a base? Does it manage to turn around? Or does it just keep going? All right. And the implications either way are relatively important. In order for this to turn around, I think the markets would have to really feel some optimism that I don't think there's going to be an end to this war. Like, I can't see America backing down from it and Iran is winning. So like, I can't see how that's going to happen. So it's a catch-22. So we'll have to just see how that goes. Anyway, wanted to show you that. So that's the global markets. That's really what's going to be happening this week. We are starting to fall. It always falls more aggressively. But the monthly will give you the sense of perspective. For example, it could still fall. The S&P could still fall down to 6,000, 6,100 and still be in a nice, relatively strong uptrend, recover in April, May, and keep going. Historically, guys, sell in May and go away. So historically in May until about September, the markets can be in a bit of turmoil. So if we are in turmoil now and then we get to May, the markets might continue down further. So we'll see how that goes. Same thing here. So please just keep an eye on the markets. If you're going to short the markets, just be very cautious. Understand that there are orders sitting at levels like this, for example, that have been there for years. So, or have been there, I beg your pardon, have been there since July last year. So in other words, as soon as market goes up, they're always just trailing orders saying, listen, if you do come back to that level, just fill my order. So you can get, so you can get some bounces off this. So just be prepared for that. The FTSE as well, also a nice healthy correction from a Fibonacci perspective. 382, 50 fib. So I guess what I'm saying here is that the markets can still go down a bit and still, and still look very bad from a daily perspective, and then actually recover over a few weeks and then start going up again in the next few months. And you'll look back and realize actually their correction was well within their Fibonacci limits. So I'm not saying that's how it's going to go. I'm saying that, well, I've been around and that's how it could go. And I just need to put that idea in your head. Because one of the things that destroys traders is we get a bad idea in our head. We don't think it's a bad idea. We're like convinced this is going to happen. And so we go against the evidence on the screen and then in the end, our brain is overriding reality and we can't have that happen. So the counter to that is to always imagine that the opposite could happen, even if we don't understand how, but it could. And that what would we need to see for that to be the case? In other words, we're always offering our brain an off-ramp. If we are going the wrong way, we need to give our brain an off-ramp saying, you're going the wrong way. Like, we need to protect ourselves. And that comes from training and experience. But just know this, our natural instincts are garbage. Our natural instincts are garbage. And they never really get better. So you always have to, include the possibility that you could be wrong, no matter how sure you are that you're right. But you have to ask yourself, what would that look like? It's very good for you to do it. Okay. In the same way that they say that like reading and doing puzzles and various other things is a very good um, it's a very good exercise against Alzheimer's and dementia is to do puzzles and keep your brain active. It's the same thing. So as a trader, to keep yourself objective and neutral and able to see the battle unemotionally so that you're on the right side of it, you need to always think about what the other side would look like. So just doing that exercise is very good for your brain. Okay. Sorry, guys. I don't want to bore you to death here. I don't want to bore you here. Yeah, so the question here is, is May pretty much red everywhere based on the sell in May and go away? You know, uh, Interestingly, it can just go sideways. Often because people go on holidays and the schools have their holidays in the summer in the Northern Hemisphere, it can just end up doing nothing really. And that's kind of what they mean. It doesn't always have to be red. September is usually the month that has the biggest drawdown. And often September will come at the end of that whole thing. So you might have the market going sideways and then it sort of starts going down August and then you have a bit of a dip. But for the most part, and Berkshire Hathaway would confirm this, they tend to have a really good run up until April most months, and then not as much growth, and then they have like September through till April again. So yeah, it's interesting. So all I'm saying here, guys, is I'm trying to imagine what it would look like for the markets to look like they're okay. What would it look like for the markets to go sideways, and what would it look like for the markets to be bearish? But one thing I want you to just keep in mind, please, is that historically, all right, the markets go up. Historically, the markets go up. And it's not like people are going to just stop using American products immediately. They're still going to do it. So that like they built their entire businesses on Excel and various other things. And I know about all the developments with AI. So that everyone's at threat actually, because people will be able to create their own version of anything within the next year. Like it's insane. So actually everyone is pretty much at threat. Um, so we're entering a very interesting phase, but it's not the first time we've had new technology, but it is very, very interesting. So I guess what I'm saying here is just be prepared for anything. It's not fun because we just want to be able to relax and just focus on building our trading skills and building our account. And then everything around us is changing. So it's like typical. But there's also so many exciting things that are on the horizon as well. Okay, sorry, let's carry on, guys. So just exercise caution is all I'm saying here, please, with a lot of things. And I'm not seeing anything that I really love there. The yen pairs. And finally, just to wrap up here, the ones I do like. Let's have a quick look at the Aussie pairs. So all I'm doing here, we'll go to the weekly chart. I like the look overall trend. We are coming back down. So I do think this week or next week, Aussie Kiwi could provide a buy opportunity. So again, same thing again. I would monitor this trend. Look at this. My guys, you know what I've just taught you guys this. Look at this. There's your breach of your trend line. What is this pattern? Okay. Look at the difference. We're now going sideways. So what are we looking for? We're looking for a break above and a move. Okay. So we're looking for this. Now, it could do this the whole week. And then next week, go and do it. But that's what we're looking for. Okay. So Aussie Kiwi is on my watch list. Aussie Swissie is kind of in the same place, but it's very choppy and messy. Aussie CAD. But keep an eye on these. But Aussie Kiwi is actually one of the best ones there. Aussie Sing as well. So Aussie Sing, if I come down here, it's starting to slow down. But it might not be this week, it might be next week. Okay. CAD Swissie is on my list for the same reason. Go here to the weekly. This is potentially. It's quite funny because I actually thought there was a setup happening here. Got a bit of money here, gave it a bit back on this one, but a bigger picture one. It's still the same thing. This is still doing the same thing. You've got your bullish divergence, and again, this is a weekly chart, so this could take a while, but I am looking for this to happen. So one more thing about this is that would be CAD Swissie and Aussie Swissie. What did we say? No, it's fine. But let's look at the Swissie pairs and then we're done. So we have Euro Swissie Let's just look at it from a weekly perspective. Not really seeing anything here. Nice downtrend break, level of support that could well become resistance. So there may end up being this week a reversal here. Might be. Pound Susi is trying to turn around. So it's trying, but a bullish divergence starting to creep in here. Why do I say that? Lower lows, higher lows, kind of getting a little bit flat. Bet you if we go to the daily, we'll see it. Go to the daily, and you have for there to there, it's kind of starting to go a bit flat. Okay, never mind. So not pound Susi, Aussie Swissy. What about Kiwi Swissy? No. Okay, forget about it. I thought the Swissy pairs were going to start to look a little bit bullish. I thought they were, so maybe dollar Swissy is the one to go with. So to recap, guys, so far, at least for if we're going to go from where we are now, potentially to where we are here, we could still see a dollar strengthening this part of the week. We've got jobs numbers on Friday. So Friday, my recommendation is you don't trade. You or whatever trades you got open, you look to take some profit, get your stop losses to break even if you can, and psychologically prepare yourself that when the news comes out, it might stop you out of a trade. Just get used to that process. I think the yen pairs are very interesting to watch as well. Some of the crosses would be my preferred trades to the upside, and cautiously bearish on the indices. Gold and silver, we'd have a look at. Crude oil, I think, is one of the really good contenders for a move to the upside. I think that is probably one of your better trades this coming week. As I said, stronger dollar. And then we didn't look at like EuroCAD. It's okay. EuroCAD, Euro Aussie. So Euro Aussie is a weekly pullback. So you might this week see Euro Aussie getting ready. So again, I'll go back to it. The Aussie pairs are offering something potentially of interest. Aussie pairs. Excuse me. Aussie Kiwi, Aussie CAD or something. There's a couple of these, or was it Aussie Sing or was it Aussie Swissy, that are offering some possible opportunity there. And then, yeah, a couple of the yen pairs moving to the upside, cautiously on the downside here, and dollar pairs. Any questions, guys? Cheapers, I'm sorry, I ran over again. I always do that. Am I right that during the World Cup month, most of the trades will slow down as well? I'm not really sure. It's possible that people are waiting for some kind of events to happen so that they can trade them and make money. So you might find that with all the other stuff going on, if there is some kind of a big event with crude oil or big event with gold, trade people will come back. So even in the past where they might have gone on holiday, they might listen, nothing has happened in the first half of the year. It's happening now. Let's take advantage of that. So actually, I'm really not sure. It's interesting. Um, can I go back to Aussie Kiwi? Yes, I can. Okay. So, uh, first of all, what is the monthly direction? It's up, right? You've got your 50, 20, and 10 trending upwards. Is it overextended? Yes, it is. Yes, it is, because you can see we broke through here and it hasn't come back to test it. So absolutely. Where's the next level? We're kind of roughly in the next level area here if you look at that. So it's a bit overextended. It's just due for a bit of a correction. Sure, sure, sure. The weekly has actually started to retrace. So the weekly is currently in a retracement back down to this area. So let's zoom out. Let's just go back and see where the next area is. So there's an area here. Let's just see if there's anything else I'm missing. Yeah, call it that. Call it that. So those are your main levels. So we could possibly still see this pull back down towards here this week. Now, if that is the case, what should happen on the lower time frames is that we would have a downtrend, and then if it did turn around here this week or next week, we would start to get ready to turn around and then start going up, if that was going to be the case. So what I did was I went down from the weekly, just straight down to the 4-hourly, but got it to the daily here. And the problem is that the 4-hourly is already showing, turning around behavior. Honestly, I think it would be better for it to come a little bit further down. So you can see the levels. So if we go to the 4-hour, basically, I think it would be better for it let's go back up. What am I looking for? Yeah, I would still prefer for this to come down here and then turn around. But I'm just showing you this. So this could happen. Thank you, Sam. So this could happen, guys. It comes around here and it does a breakout. And it breaks out, and maybe if you got in here, you hit your target, you get your target, and then it falls down here a bit and carries on down. And then it turns around and goes back up. This is why, as traders, we never presume that a trend is going to last forever. We understand that, okay, I'm going to just make sure I get my money and get my trade to break even, and then anything after that is great. So in this situation, I do think it's trying to turn around. I do think it might try to break up, and there might be a shorter term trade here, and maybe it'll keep going, maybe. But I've also said to you, if you look on the weekly, it could really benefit from a pullback here. The monthly is heavily overextended. The weekly is already on its way back to the moving averages, which is here. So it would be healthier for Aussie Kiwi to pull back to here and then carry on. But it's already trying to turn around. You can see it's already trying to turn around. So that presents a dilemma. It's not our imagination that's trying to turn around, and it is going to potentially break through and try to go high. If it can't break through here, it might just end up, this might end up just being a consolidation. So right now it's going sideways. So it might end up just breaking down here, and then we see a similar attempt to turn around and go up here. My guys will know what that means. But yeah, so I like this one. Keep an eye on it. It is trying to turn around. It's got to break up. That 1.2 level is clearly a significant one, and take some money as you go. But if it does end up breaking down and carrying on down to 1.18, sorry, 1.178, like we'll know why, because of the weekly stuff. All right, guys, I'll let you go. I'm sorry. I get all excited about this stuff, and I don't get to do this with you guys often. So I hope you found it instructive and useful. And just understand that there are not as many trades normally at the moment. There really, really aren't. I've got a couple of algos that run as well, and they're taking fewer trades. They're not taking a huge number of trades. So like everything is just kind of slowing down, going into a little bit of a coma. And that's why we are in wartime, so to speak. But eventually it'll start moving again. And when it does, usually, so if you think of this as winter and then we get spring and summer, when that happens, there should be lots of stuff to harvest. You can only make money if the markets are moving. You can't, if they're not moving, you can't make money. So I understand, because you guys are still trying to skill build, you're still trying to build your skills and experience. And you're like, well, how do I progress if I don't trade? That's true, but there's lots of books you should be reading and lots of other stuff you should be doing as well as that. So you fill your time with backtesting and various things. All right, guys, I'll let you go, and I will, I will send you an update on like Monday or Tuesday, because I'd normally do it today, but I will do it with you guys on Monday or Tuesday instead. All right, guys. Enjoy the rest of your weekend. What's left of it. Thank you so much. As always, it's a pleasure.